Anthony Grasso here, bringing you financial news that you can use. In this particular video, I'm going to do a stock review on Lithium Americas. Is this lithium mining company worth investing in right now? Well, let's find out together. I'm going to go over a summary of the company, its product offering, recent headline news, analyst projections, financials, and give them a buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. As always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell if you like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So as always, this video is brought to you by Webull, which is an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you can get up to 12 free stocks by using my referral link in the description down below. All right, so Lithium Americas Corporation operates as a resource company in the United States and Argentina. The company explores for lithium deposits. It owns interest in the Cachari-Olores project located in Jujuy province in Argentina, and the Thacker Pass project located in northwestern Nevada, and the Pastos Grandes project located in Salta province of Argentina. The company was formerly known as Western Lithium USA Corporation and changed its name to Lithium Americas Corporation in March 2016. So it was incorporated in 2007 and is headquartered in Vancouver, Canada. So let's look at some of the news that came out on the company in the past couple of months. So back in July, the company celebrated the inauguration of Lithium Technical Development Center in Nevada and provides Thacker Pass update. Now, the Lithium Technical Development Center, it completed the construction of that new integrated technology center in Reno to demonstrate the full Thacker Pass flow sheet and to produce lithium carbonate samples. The center will support ongoing optimization work, confirm assumptions in the design and operational parameters, and provide product samples for potential customers and partners. Now, in addition, the 30,000-foot facility has been designed to conduct test work on new target ones and brines, and contains state-of-the-art analytical laboratory capable of analyzing ultra-pure lithium compounds. Now, Lithium Americas and the University of Nevada, Reno, are collaborating on this commercial work while also educating the next generation of engineers and researchers who will play an essential role in curbing harmful emissions. Now, the center's initial production using the Thacker Pass flow sheet and sedimentary resources from the project site successfully produced 5 kilograms of battery quality lithium carbonate. In addition to generating the sample material, the facility will enable the team to continually optimize and de-risk each step of the flow sheet. Now, back in April 2022, the company submitted a formal application to the Department of Energy's Loans Program Office to be used at Thacker Pass through the ATVM loan program. Now, the ATVM loan program is designed to provide loans for facilities located in the United States for the manufacturing of advanced technology vehicles and qualifying components used in those vehicles. In addition to potential funding from the Department of Energy, the company is exploring other complementary funding, offtake, and partnership alternatives. As previously announced in February of 2022, the company continues to explore a separation of its U.S. and Argentina operations. While no final decision has been made, the company is exploring structurally alternatives to effect the separation. So let's go ahead and look at some of the fundamentals of this company right now. So the stock is currently trading at $30.12 a share with a market capitalization of roughly around $4.1 billion. Now, the company is projected to have $25.57 million of revenue for 2022 with one of their projects going online, but they'll have negative earnings of $97 million. Now, the revenues are projected to significantly increase over the next few years to around $239 million by the end of 2023, with positive earnings of $119 million. So let's look at some analysis of this company real quick. So since the company has negative earnings, the price to sales and the price to book ratios are the most appropriate valuation measures. So the price to book versus its peers, It seems expensive. The company seems expensive based on its price to book ratio of 4.9 times compared to the peer average of only 2.9 times. Now, how does Lithium Americas price to book ratio compared versus other companies in the metals and mining industry? Well, also seems expensive because the price to book ratio of 4.9 compared to the Canadian metals and mining industry average is only 1.6. Now, looking at the profitability of this company, even though the company is currently unprofitable, as soon as the mining operations commences, they are projected to become profitable extremely soon. Now, the company is projected to have high growth earnings in the future. It's expected to become profitable over the next year to two. Now, the revenue is forecast to grow on average about 39% per year. Now, looking at the financial strength analysis for Lithium Americas, the debt to equity ratio has increased from 1.1% to 26% over the past 5 years of ramping up the mining operations. But it has more cash than its total debt. The short-term assets of 445 million exceed both its short-term liabilities of 10 million and its long-term liabilities of 221 million. Now, it does have a stable cash runway, has sufficient cash runway for more than 3 years based on its current free cash flow. And the forecasted cash flow has sufficient cash runway for 2.7 years if the free cash flows continue to reduce at historical rates of 32.5% per year. Now, we have to note that the shareholders have been significantly diluted in the past year, with total shares outstanding growing by 12.2%. So what did the analysts specifically say regarding this company? So the average consensus is a buy recommendation over the next 12 months. They project an average stock price of $37.58 a share, with a high average of 44 and a low average of 33. Now, going over the few of the analyst reports, well, I couldn't really find anything, but I did see here that the CFRA did update a report, and they said that Lithium American Corporation was a hold recommendation based on its score from the quantitative model for Canada. But besides that, there wasn't really any other research reports that have looked at this company. So let me bring it back over here. So my buy, hold, or sell recommendation on Lithium Americas. Here are my thoughts. First off, I want to know Lithium America's business strategy right now to understand the business. So Lithium America's goal is to become a low-cost, pure-play lithium producer. Now, currently, there are no lithium sales volumes, but it's developing 3 resources that should eventually enter production, with the first project to enter production by the end of this year in 2022. The Cachari Oloros and Pastos Grandes are brine resources located in northwestern Argentina. The Thacker Pass is the company's clay resource in U.S. state of Nevada. At the Cachari Oloros, Lithium America owns 44.8% of the project. The project plans to bring an initial 40,000 metric tons of capacity later this year, with plans for an additional expansions. Now, Lithium Americas owns 100% of the Pastos Grandes project. That project aims to produce 24,000 metric tons per year. And Lithium Americas also owns 100% of the Thacker Pass resource. It plans to bring in an initial 40,000 metric tons of the capacity with an additional expansion plans. Now, while management plans the initial capacity to be about 80,000 metric tons, I see potential for the project to eventually produce 240,000 metric tons, or roughly 4.8 million electric vehicles, assuming an average battery size of 50 kilowatt hours. The project at Thacker Pass currently faces a lawsuit from an environmental activist, but I think the company will win and the project will move forward. Now, what I predict, if and when the company wins the lawsuit, just on that news alone will give a huge percentage increase in the share price for that week. Now, the company is considering separating the company into 2 businesses based on geography. The Argentina business would contain Cachari, Oloras, and Pastos Grandes, while the U.S. business would contain Thacker Pass. Last week, lithium stocks rallied following the U.S. Senate's passing of the Inflation Reduction Act. Now, the bill produces subsidies for electric vehicles and plug-in hybrids. As long as there's a minimum proportion of critical minerals, including lithium, comes from the US or its trade partners. Now, I think this will benefit all lithium producers from increased demand, which should keep the market undersupplied for a long time. I believe that the lithium market right now will remain undersupplied throughout the rest of the decade, supporting prices well above the marginal cost of production, which is that's important because they don't want the lithium to really decrease that significantly in price because they have a cost to actually mine it out of the ground. In summary, through the ownership of the three large lithium resources, Lithium Americas should be able to enter the lithium industry and become a major producer globally with one of the lowest cost lithium carbonate resources and one of the largest rock-based resources globally. As a lithium pure play, Lithium Americas is well positioned to increase profits from EV growth through lithium batteries. Now, lithium prices will remain well above the marginal cost of production through at least the remainder of this decade, leading to excess profits and return on invested capital for Lithium Americas. I believe that the Inflation Reduction Act will keep lithium prices high as well. So based on all of that information, I am a long-term bull recommendation on Lithium Americas, but buy in at the right price. I did see it swing a little high, over the past couple of days. I would target a buy-in price roughly around $25 a share once the news subsides and people take some profit sharing and buy on the next dip and hold for the long term. I put a 12-month price target on Lithium Americas at $40 a share. I'll sum it up by saying this company has high growth potential with an excellent balance sheet. Now, regardless of the projects and the market itself, which is not fully established, the stock remains a speculative investment because there's unknowns into the future. So, because it's still at the development stage. But there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing. Hit the notification bell for your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.